Stock Market Documentary Channel presents.
Joining us now is Gerald Celente. He's the director of the Trends Research and author of Trend Tracking and Trends 2000 and publisher of the Trends Journal, and is considered by many to be the top trends forecaster in the world. Gerald, what a wild week. The Nikkei has just been tumbling. They finally managed to rally in the Dow of a few hundred points here on Friday, but gold yesterday, as you know, soared up $67 at one point during the trading session before pulling back. But it's wild out there, isn't it?
It certainly is, and you mentioned that the Dow had a nice comeback today, but, for what and why? And what has been out of the news in that whole comeback, and you mentioned it briefly, is Japan's Nikkei dropping, almost 5% and falling for 7 of the past 8 sessions, and now at its lowest close since 2014. So all of that Abenomics and now the new scheme of negative interest rates, it's not doing the job. And you look at, the Dow went up today. Great. Hey, but the Dow is off some 14% since its all-time high in May. And then you look at the earnings for the S&P 500 companies. Oh, they're down only 4.5% in the fourth quarter, and now they're expecting about a 6.5% drop this quarter. So what's the upside of stocks? Why would you go into the market when you're looking at all this weakness? And you look at, the S&P 500, it's down more than 9% year to date. And you look at the financials, energy, and materials, they're all in bear market territory, down more than 20% from their 52-week highs. And then, of course, there's the NASDAQ. And what are we looking at, Eric? We're looking at it down nearly 20% from its July 2015 peak. And July 2015 is an ancient history. That's a long drop in a short time. So it's down almost 18% plus. So these negative interest rates, plus this massive exposure in the energy, mining, and all the other related industries, they're driving down prices across the board. And the negative rates, they're totally experimental, and they're not doing what's expected when you can see what's in Japan. So we're looking at something, when I negative rates. I mean, here we are, we're talking about this as though this is a normal thing to talk about, and it makes perfect sense. I mean, did you learn this one in Economics 101? I mean, nobody ever heard of this stuff before, and now they're pumping this stuff out where now you're even hearing the Federal Reserve Chairman yelling, screaming about the possibility of negative interest rates.
Gerald, they did put a few hundred points on the positive side in the Dow. They may continue to rally this thing out of the hole. It hit the wire today, obviously. Jamie Dimon bought a bunch of J.P. Morgan stock in the open market. But your thoughts on the possibility of a little rally, maybe a short squeeze on the public short positions to get them out before the next tumble to the downside? Is that possible?
Of course it's possible. Absolutely. The game is rigged. Go back to the Davos meeting in mid-January. I mean, I read it on King World News when you had Art Cashin on. And you had Ray Dalio from Bridgewater Associates saying that we needed more quantitative easing from the Fed. What happens the next day? And who's at Davos? I mean, you had, the prime ministers, the chancellors, the presidents, secretaries, this and that, of the cabinet ministers. And next day, Draghi comes out with a big promise that, hey, there may be some stimulus coming when they meet in March. And then who else is at that meeting? Oh, yeah, the guy from Bank of Japan, that president. And as he leaves Japan, he tells the parliament he's not going to go into negative interest rates. But when he leaves Davos, Japan goes into negative interest rates. Of course they could juice the markets. I mean, Jamie Dimon buying back his stock. How could anybody be impressed by that? Matter of fact, to me, that's a red flag. Of course they could boost the markets up. Sucker in the people, and get rid of the shorts. And to me, this whole picture is going to be, after that happens, this market goes down, and then what they'll do is they'll make Dalio's wish come true. Because everybody's saying right now these negative interest rates, all they're doing is shooting blanks. So, hey, let's go for another round of stimulus. more quantitative easing.
Gerald, where are we headed from here the rest of the year? What do you see happening?
Follow the money, because money makes the world go around. Just look at the last 6 weeks. Whoever remembers 6 weeks like this? Happy New Year. The banks in Europe are down 24%. Just in 6 weeks, the Europe Stock 600 down 14%. Again, the Dow is off some 14% since its all-time high in May. So it's down. Look at the emerging markets. Look at the debt levels that they have. Look at the loans on the books of the banks. Why do you think the banks are in such bad trouble? Oh, and they keep saying, well, you know, there's only about a 5 to 8% globally exposure to the energy field. How about all the other fields related to energy? And that's just talking about energy. You know, I can't believe this. You look at all of the news from CNBC, from Bloomberg, from the Wall Street Journal to the Financial Times. All of this downturn, let's just add up 1 and 1 and make it 2, China and oil. Or is it oil and China? Can't anybody think beyond this? It's not oil in China. It's a global slowdown. Look at the Bloomberg commodity index to 1991 levels. Look at the exposure that these banks have on their books across the spectrum. From transportation to mining to minerals to you name it. And now, with negative interest rates, their profit margins aren't very good. So we're looking at, as we see it, this is the beginning of the panic and the global recession. And you just listen. You know, I talked about the negative interest rates shooting blanks. How about Janet Yellen appearing before Congress shooting blanks? You should have heard her when she was pressed on what the economic implications were of this current market turmoil. She said she didn't want to jump to conclusions. I mean, who could get away with this? Jump to conclusions? I thought these are the smartest people that hype themselves as being the world's smartest people. You know, these are the people in charge of the world's money, and she provides no vision of the future? They're supposed to be macro thinkers, and she tosses out that minor line? They don't have a clue what they're doing. And I'm going to tell you something, Eric. What I see coming is the real possibility of negative interest rates in the United States, and I'll tell you why. What they do is they keep throwing out trial balloons. That's the way government works. They push it out there and see what kind of feedback is going to come, whether it's in war, invading countries, whatever it might be, to the markets. You go back and listen to this quote. Some of the experiences in Europe suggest maybe we can use negative interest rates and the costs aren't as great as you anticipate. That was said by William Dudley, the president of the New York Fed. Just a couple of days later, former Fed Chairman Bernanke comes out and he says that they didn't deploy negative rates because, quote, he was afraid zero interest rates would have adverse effects on the money market funds. But he goes on to say that, but events in Europe over the past few years have changed his mind. In Europe, the European Central Bank, the Swiss National Bank, and the central banks of Denmark and Sweden have deployed negative rates to some small degree. Quote, we see now in the past few years that it has been made to work in some European countries. So I would think that in the future episodes that the Fed would consider it. He said it wouldn't be a panacea, but it would be additional support. Eric, this is from October 12th, 2015. And now you're hearing Janet Yellen whispering about the possibility of negative interest rates. And with the reality is that nobody knows how these work, but the facts are all you have to do is cast your eyes to Japan, look what's going on in the Nikkei, look at how their bank profits are being pummeled, and now they're talking about negative interest rates? Of course, she doesn't want to jump to any conclusions, the Fed chair, when asking about the current market turmoil.
Gerald, gold was obviously the talk of the week. It headed up nearly $70 on Thursday, had a little pullback. But your thoughts on what we're going to see in gold the rest of the year? I know you've mentioned before that you thought 1,400 was the next critical level. And when we get above there, we stabilize and go to 2,000. But talk about gold the rest of the year and what you expect to see.
Well, look, gold's just had its best week in 4 years. And it's really moved up on the strength. The strength of gold moved up on the weakness of the banks. Again, just follow the money. Banks bad, gold good. It's as simple as that. Banks are the major indicator, and the banking sector stinks. And it keeps getting downgraded. And it gets spiked up on the good news that Deutsche Bank is spending $5 billion in senior bonds, and it spikes at 11%. Has nothing to do with why Deutsche Bank stocks have plummeted some 40% just since the start of the new year. It's merely a cover-up to make it seem as though they have the reserves, them as well as the other banks, to weather the massive debt storm rolling in the bank sector. So to me, gold is the ultimate safe haven. Gold price is going to go down. They only went down some $8 and change today, considering that all that boosting of the market and energy prices going up on more news that OPEC might get together with Russia and some other countries and cut production, as though that's going to solve the problem. Because, let's suppose they cut production and prices go back up. Well, all those rigs that they closed down around the world, they'll get back into action, and they'll put more supply back into the stream if prices go up. So it won't do anything. I'm making the point because you can have these phony hypes, and it will do a negative hit on gold, but only temporarily. They're running out of ammunition. It has been shown with them shooting blanks with negative interest rates. So the next thing they're going to be doing is they're going to be screaming and crying and begging and forcing the puppets at the central banks for more quantitative easing. When that happens, there goes gold. It hits that $1,400 mark and beyond.
And for those of you who would like to open up an account for yourself or a loved one and deposit $2,000 and have it instantly credited with $2,100 in gold, you can email alexander@bitgold.com. That's ALEXANDER@bitgold.com. BitGold is revolutionizing the world, and you can become part of that revolution by opening your account today at bitgold.com. And as always, Gerald, for people listening around the world that want to get involved in the trends in the news, how do they do that?
Well, our Trends Journal is a quarterly, of course. You go to trendsresearch.com. We have Trends in the News broadcasts each weekday night, Trends Monthly, and Trend Alerts each week. So it's trendsresearch.com.
Gerald Celente, Director of the Trends Research and author of Trend Tracking and Trends 2000 and the publisher of the Trends Journal. Thank you for joining us on King World News.
Eric, it's always great being on King World News, and thank you for all that you're doing to keep the public informed, alert, and ahead of the trends.
Be sure to tune in as we will continue to release interviews with the top people in the world throughout the week. Also, make sure to check out the King World News blog.
Gerald Celente, global crash of 2016 is going to be twice as devastating as '08. Chaos is going to spread wide and far. Gerald Celente, one of the wildest 6 weeks of trading in history, but here's the big surprise. On the heels of an absolutely wild trading week for global markets, today the top trends forecaster in the world spoke with King World News about one of the wildest 6 weeks of trading in history. Eric King, Gerald, they put a few hundred points to the upside in the Dow. So they may rally this market out of the hole. It hit the wire today that Jamie Dimon bought a bunch of JP Morgan stock. Your thoughts on the possibility of a rally, maybe a short squeeze on the publics, near record, short positions to get them out before the next tumble to the downside? Do you see that as a possibility? Gerald Celente, of course it's possible. Absolutely. The game is rigged. Go back to the Davos meeting in mid-January. Gerald Celente continues, what happens the next day and who's at Davos, where you had the prime ministers, the chancellors, the presidents, cabinet ministers? The next day Draghi comes out and says there may be more stimulus coming when the ECB meets in March. The big surprise. Who else was at that meeting? The head of the Bank of Japan. And as he leaves Japan, for Davos, he tells the parliament he's not going to go into negative interest rates. But when he leaves Davos, Japan goes into negative interest rates. Of course they could juice the markets. Of course they could boost the markets up, sucker in more people and get rid of the public's shorts. But after that happens, this market is going down. And then what they will do is they will make Dalio's wish come true. Because everybody is saying right now that these negative interest rates all these central banks are doing is shooting blanks. So hey, let's go for another round of stimulus, more quantitative easing. Eric King, Gerald, where are we headed from here for the rest of the year? What do you see happening? Gerald Celente, follow the money. Just look at the last 6 weeks. Who remembers 6 weeks like this? Happy New Year! The banks in Europe are down 24%. In 6 weeks, the Europe 600 index down 14%. Thank you for watching. Please subscribe to our channel. Stock Market Documentary Channel presented.